Today we're wrestling with a question that's, well, it's huge. It sits right at the intersection of climate science, ecology, and, high finance. The core question is this. How do we save the world's most vital carbon-sucking ocean ecosystems? And maybe more controversially, should the answer involve giving them a colossal price tag?
That's exactly it. That question is our mission for this deep dive. We're focusing on something called blue carbon. That's the carbon captured and stored by these coastal habitats. And we're looking at the emerging global financial systems that are being designed to protect them. But not just protect them. The goal is to integrate them as measurable, valuable assets into what's called the voluntary carbon market, or the VCM. Our sources get into the weeds on this. They detail the immense economic value of mangroves, of salt marshes, of seagrasses, but they also, and this is crucial, lay out the big challenges in turning these natural treasures into, well, market-ready financial instruments.
Yeah, and we're calling this conversation the trillion-dollar auction to save the world because the numbers we're about to unpack are, frankly, staggering. And look, if the idea of mixing delicate ecology with the mechanics of global finance sounds a bit overwhelming, don't worry. We want to assure you that by the end of this, you'll walk away with a really clear picture of the science here, the shocking valuations, and why this conversation is just so critical for climate action. Okay, so let's start with the science first. It feels like the right place to begin. When we talk about, sequestering carbon on a global scale, I think most people's minds go straight to the Amazon rainforest.
The big boreal forests. Yeah.
Exactly, and they are climate heroes, no doubt about it. But the sources we looked at, they reveal that the true quiet superheroes of climate are actually coastal. We're talking about 3 key blue carbon habitats.
Right, and we should name them. The champions here are, first, mangroves. Those are the dense, salt-tolerant trees and shrubs that you see in intertidal zones.
Yeah.
Then you have tidal salt marshes, which are these sprawling coastal wetlands in more temperate zones. And finally, seagrass meadows. And these are often overlooked. They're flowering plants that form these vast underwater carpets in shallow coastal waters. And when you put their numbers, their efficiency, side by side with terrestrial forests, the comparison is, it's genuinely shocking.
Shocking is absolutely the right word. The data is just indisputable. These coastal systems, these plant-based ones, are some of the most carbon-rich ecosystems on the entire planet.
On the entire planet, not just in the ocean.
Exactly. And it's not just that they're rich in carbon, it's that they are incredibly effective for long-term storage. That's the real kicker.
It comes down to 2 things, really. Speed and durability.
Okay, let's break that down. Speed and durability. What do we mean by speed?
Well, let's start with speed and scale. The sources we reviewed indicate that these systems bury carbon up to 35 times faster than a typical tropical forest.
Wait. 35 times faster?
35 times. It's an incredible rate.
Yeah.
And that speed alone makes them revolutionary if you're trying to meet, urgent climate mitigation targets.
We're not kidding.
But it's not just the speed. You have to consider the scale. Globally, these ecosystems contribute a massive 50% of the total carbon that gets buried in all ocean sediments.
Half of it.
Half of all of it. And they do this despite taking up a tiny fraction of the geographic area. It's all thanks to their unique biochemistry and the water they live in.
And that distinction, that idea of where the carbon actually sits and why it lasts so long, that seems to be the core of their value.
It is. It's a completely different model. In a forest on land, most of the carbon is stored in the visible parts, the trunk, the branches, the leaves. The biomass.
Right, which means if there's a forest fire or the forest gets logged,
poof! It's released pretty quickly back into the atmosphere. It either burns or it decomposes. But blue carbon operates on a totally different principle.
Right.
It's optimized for durability. The vast majority of the carbon, we're talking somewhere between 50 and up to 99% of it, is stored below ground. It's in the soil.
In the mud.
In the waterlogged organic soils. Exactly. When organic matter, like fallen mangrove leaves or dead seagrass roots, settles into that mud, it creates an anaerobic environment.
Meaning no oxygen?
Precisely. There's no oxygen or very little of it, and that is the key.
So the lack of oxygen just slows everything down?
It slows decomposition down to a crawl. The microbes that would normally break down that carbon very quickly in an oxygenated environment, well, they just can't thrive down there. So that carbon gets trapped in the coastal sediments, and it's incredibly durable. These deposits can build up over time, sometimes up to 6 meters deep.
6 meters? That's almost 20 feet of stored carbon.
Yeah, and it's capable of staying there for centuries or even millennia.
Which is a huge deal for carbon markets, right? Because a lot of terrestrial forest credits might be based on a 50 or 100-year storage window.
Exactly. Blue carbon offers a level of permanence that goes way beyond that, and that's critical for, investor confidence and for actual climate stability.
So, to help everyone listening really grasp the physical scale of this, we have some specific numbers. This isn't just an abstract concept. We have an inventory.
We do. And just looking at the carbon stored in the top meter of soil really paints a clear picture. Mangroves are the absolute champions here. They store, on average, about 280 megagrams of carbon per hectare.
And a megagram is just a metric ton.
That's right. So 280 tons of pure carbon locked away in the soil of every hectare. And when you add the carbon in the trees themselves, the total capacity is 1,494 metric tons of CO2 equivalent per hectare.
Wow. Okay, what about the others?
Tidal marshes are right behind them. They store about 250 tons of carbon per hectare in the soil, which works out to about 951 tons of CO2 equivalent in total. Then you have the seagrass meadows, the underwater gardens. They store about 140 tons of carbon per hectare in their soil for a total of around 607 tons of CO2 equivalent.
It's that comparison that really hammers it home.
It is.
The sources say they store 3 to 5 times more carbon per acre than a typical tropical forest.
That's right.
Their role is just massively out of proportion to how much space they take up on the globe. They're small, but they are so, so mighty. And that brings us, I think, to the financial side of this. This is where it gets really mind-bending. We've established they're these unparalleled climate heroes. They soak up CO2 faster and hold it longer than their cousins on land. But how do we translate that ecological value into a financial value? I mean, outside of just selling carbon credits, what is the price tag we're attaching to nature in this trillion-dollar auction?
This is a really important transition. It requires us to understand the concept of ecosystem services. And more broadly, something called natural capital accounting. When we value nature, we aren't just measuring the potential money from selling a carbon credit. We're trying to calculate all the measurable benefits, the services that these coastal habitats provide to us, to human society, to the global economy, often for free.
So it's not just the stuff you can sell, like timber or fish. Those are what provisioning services.
Exactly. We're also calculating the value of the things they do for us. The protection they offer, the water they clean, the climate they help stabilize. Those fall under regulating and supporting services. And these services are incredibly diverse and essential. We're talking about coastal protection from massive storms, providing nursery habitat for fish that are commercially valuable, tourism opportunities, cleaning wastewater, and of course, supporting biodiversity. And when economists try to add all of that up globally, the numbers become, well, they become truly eye-watering.
Okay, give us the global total. Because this number, it really shifts the entire perspective on conservation. It stops being an expense and starts looking like the best investment you could possibly make.
So a comprehensive study back in 2007 calculated the total value of all ecosystem services and products provided by the world's coastal ecosystems. And the number they came up with was an astounding $25.783 trillion per year.
Hold on. $25 trillion annually.
Annually.
That's not just a big number. That's like a foundational global GDP level figure that's being generated by these natural assets that, for the most part, we treat as completely disposable.
Exactly. And we can even break that down. If you look at just a smaller piece of the puzzle, like coral reefs, which often live right next to these blue carbon systems, their total net benefit per year is estimated at $29.8 billion.
And that's not theoretical money.
It's not at all. Tourism and recreation make up $9.6 billion of that. Coastal protection, so the value of storm damage they prevent, is $9 billion. Fisheries, $5.7 billion. And just the value of their existence, their biodiversity, another $5.5 billion. It shows you the immediate, measurable economic engine we are putting at risk.
But the Caribbean seagrass case study, that, for me, was the real aha moment in the research, because it forces you to compare the value of nature directly against the value of an entire country's economy.
Yes, the Caribbean example just makes the case for this kind of accounting undeniable.
Right.
Researchers estimated the total area of seagrass beds in the Caribbean at about 88,000 square kilometers, a huge area. And they calculated that this area stores an incredible 1,337.8 teragrams of carbon.
Okay, let's pause on that unit. A teragram. We talked about megagrams, or tons. A teragram is a million metric tons.
It's a million tons.
So that's over 1.3 billion metric tons of pure carbon just sitting there in the seagrass beds of the Caribbean. It's a colossal stockpile.
It's a phenomenal stockpile. And that's just the capital asset. Now look at the annual services. The total ecosystem services provided by those seagrass beds were valued, and this is a conservative estimate, at $255 billion per year.
255 billion every single year,
Yeah.
just from the seagrass.
Right. That's using a minimum estimate of about $28,000 per hectare per year. That's the income stream from the clean water, the coastal defense, the fish nurseries, all of it.
So that's the annual income. What about the capital asset itself? That's stored carbon, if I put a price on that.
They did exactly that. They took that stock of 1.3 billion tons of carbon and valued it using prices from the California Emissions Trading System, the ETS.
Which is a mandatory market, so prices are often higher there.
Exactly. And using those prices, the carbon pool alone was estimated to be worth $88.3 billion.
So you have two completely distinct pools of wealth, an annual service income of $250 billion and an almost $90 billion capital asset locked in the ground.
That's the full picture. It's immense.
But that's a huge, almost theoretical value for the whole region. How does this translate to a real-world impact for a single government that, has stewardship over that asset? Tell us about the Bahamas.
This is where it becomes really powerful. The Bahamas has the largest area of seagrass beds in the entire region. The estimated value of the ecosystem services generated annually just in the Bahamas is $156 billion a year.
156 billion.
Yes. And to put that in context, you have to compare it to their GDP. That single natural asset represents more than 15 times the country's 2020 gross domestic product, which was about $9.9 billion.
15 times their entire national economy.
15 times. Even just the value of the stored carbon capital, which is about $54 billion, is more than 5 times their GDP. For small island nations, this shows that conservation isn't some luxury, it's not a nice to have, it is the protection of their foundational national balance sheet.
Okay, but this raises a really critical point. It's one that always comes up when we start putting dollar values on nature. If most of this value is theoretical, the Bahamas can't go out and sell $156 billion worth of coastal protection services on an open market every year. How do they square that massive valuation with the real immediate needs of their people, with local economies?
That tension it's the heart of the problem. It's why this integration of finance and ecology is so complex. The sources really emphasize that while that huge number represents the total economic benefit to the nation and the world, the key is demonstrating that retaining the asset makes more economic sense on a local level than converting it to something else.
And the sources had some really specific examples of that exact decision, retention versus conversion.
They did. There was a study from 1998 in Thailand that illustrates this perfectly. It looked at the Surat Thani mangrove system, and it found that converting that mangrove forest to aquaculture, specifically for shrimp farming, it just didn't make economic sense once you included all the external costs.
What kind of external costs?
Things like the loss of storm protection for the coastline or the loss of the fisheries that local people depended on. When you factored in all the benefits of the intact mangroves, sustainable timber, charcoal, that storm protection, its total economic value was 3.6 times higher than the value they got from shrimp farming.
So conversion was literally destroying long-term national wealth for a very short-term unsustainable gain.
That's it in a nutshell.
And we even have a case that shows how a pretty minimal investment at a very local level can yield these huge returns. It kind of proves that this can work even without a massive global carbon market.
Absolutely. The Apo Island case study in the Philippines gets cited all the time for this reason. It was a small, focused investment of just $75,000 to protect 1 square kilometer of coral reefs. And the return on that investment was an estimated economic benefit of between $31,900 and $113,000 annually.
Wow. And that was from what, Spin?
More fish, primarily from increased fish production because the reef was a healthier nursery, and from dive tourism revenue. It's a direct, immediate, and extraordinarily high return on just protecting the environment. It makes the financial case for conservation over conversion crystal clear. But, and there is a but, if we connect this staggering valuation to what's actually happening on the ground, a massive problem emerges. Despite this profound multi-trillion-dollar value, these ecosystems are under severe, rapid threat all over the world. And losing them creates this crisis context. You're not just risking the loss of those annual services, you're also risking the catastrophic release of all that stored carbon back into the atmosphere.
Right. It's a dual threat. You lose the income stream and you dump the capital asset all at once, which makes the current loss rate so alarming. Given that we know how valuable they are, why are we still losing them? And how fast is this crisis accelerating?
The loss rates are deeply problematic. For seagrasses, the annual global loss is estimated at 1.5%. That's led to a 29% loss globally since the start of the 20th century, and the rate is getting faster.
And mangroves.
The situation there is just as dire. Somewhere between 30 and 50% of all mangroves have been lost in the last 50 years. The current loss rate is still around 2% each year.
And the economic consequence of that loss isn't just local. It hits the global climate ledger hard. What happens when we destroy these systems?
The moment the system is destroyed, whether it's dredged up, filled in, or just choked by pollution, that organic matter in the deep soils, which has been locked away without oxygen for centuries, is suddenly exposed to the air.
And decomposition starts right back up.
It resumes, and fast. The vast stores of carbon are rapidly oxidized and released as CO2 into the atmosphere or the ocean. The annual loss from these three blue carbon ecosystems results in emissions of between 0.15 and 1.02 billion tons of CO2 released every year.
Okay, let's put that number, 1 billion tons of CO2, into perspective.
It's comparable to the annual fossil fuel CO2 emissions of the entire United Kingdom.
So just by failing to protect our coastlines, we are essentially adding the emissions of a massive industrialized nation to our global total every single year.
That's the scale of it. And mangroves are a huge part of that problem. Even though they only occupy about 0.7% of the world's tropical forest area, their degradation alone accounts for somewhere between 3 and 19% of all carbon emissions from global deforestation.
Which means destroying a single acre of mangrove releases more legacy carbon than almost any other equivalent ecosystem on Earth.
It's an incredibly potent source of emissions when disturbed.
That makes understanding why we're losing them, the drivers of that loss, even more critical. We know human activities are the core threat. Let's break down the main drivers from the sources.
Yeah, we can really categorize them into three main areas. First, and this is absolutely critical, is water quality. This is the #1 limiting factor for seagrasses. Things like reduced water clarity or turbidity, increased algae in the water, and excessive nutrient loading from wastewater, from agriculture, from runoff. All of it reduces the amount of light that can get down to the seagrass.
And seagrass is a plant. It needs sunlight to live.
It needs sunlight to photosynthesize. If the water is too dark from pollution or algae blooms, the meadows basically starve to death. Nitrogen from agricultural runoff, which can start miles and miles inland, is this massive, invisible threat.
So if you're a seagrass meadow, your fate is being decided by what's happening on farms way upstream.
Precisely. The second category is more direct, physical destruction. This is coastal development, dredging and filling for ports and marinas, and also just physical damage from boats, moorings, propellers, wakes. They can scour huge patches of seagrass right off the seafloor. But the single biggest driver of mangrove loss, especially in Southeast Asia, is still unsustainable aquaculture, specifically shrimp farming. It requires clear-cutting the entire forest to create these shallow, brackish ponds.
And the third major driver is the climate crisis itself. This is where climate change starts to eat its own natural solutions.
Yes, these are the climate-induced stressors, and they often create these really destructive feedback loops. Sea level rise threatens to just drown these ecosystems, especially in areas where they can't build up sediment fast enough to keep pace. Ocean warming causes acute stress. We saw this in Australia's Shark Bay, where a marine heat wave in 2010 and 2011 caused a 90% dieback of the seagrass there.
90%.
Gone. And then you have increased storminess, extreme weather events like El Nino. They can cause widespread mangrove mortality. When you get multiple stressors at once, say a heat wave combined with a flood of polluted runoff, the ecosystem's resilience is just completely compromised.
This all points to a huge management challenge. It sounds like conservation can't just be a line on a map on the shoreline. It has to involve the entire watershed.
That is the core takeaway from the sources. Coastal habitats, especially seagrass, are surprisingly vulnerable even when they're inside a designated marine protected area, an MPA.
So the protection isn't working.
In many cases, no. Many MPAs are losing seagrass at rates similar to unprotected areas. And the reason is that the primary threats, the poor water quality, the nutrient loading, are coming from outside the MPA's boundaries. If you can't control the agricultural runoff flowing down a river and into your protected area, the designation is almost meaningless. Effective blue carbon conservation demands land use planning that extends deep, deep inland.
Okay, here's where the rubber meets the road. If these habitats are so incredibly valuable, trillions in services, billions in stored carbon, and they're facing this catastrophic loss, How do we actually use financial markets to protect them? How do we turn conservation into a scalable investment?
The main engine for this is the voluntary carbon market, or VCM. The VCM is where companies and even individuals can buy and sell carbon credits. One credit represents 1 ton of CO2 equivalent that has been reduced, avoided, or removed from the atmosphere. It's the engine that can transform the ecological necessity of blue carbon conservation into a real economic imperative.
And let's talk about the scale of the opportunity here. The VCM isn't some tiny niche market anymore.
Oh, not at all. Far from it. The VCM was valued at over $1 billion annually back in 2021, and its growth trajectory is just exponential. Projections show it increasing 15-fold by 2030 and 100-fold by 2050.
Wow. What's driving that?
It's primarily global corporations making net zero commitments. They need to offset the emissions they can't eliminate from their operations right away, and they need high-quality offsets. But there's a major shortage of high-quality supply, and blue carbon is perfectly positioned to meet that demand.
And the market already recognizes the superior quality of blue carbon, right? It gets a better price.
Yes, absolutely. Blue carbon credits consistently command higher prices, typically in the range of $15 to $35 per credit. That's quite a bit higher than, say, generic terrestrial credits like those from REDD plus CD.
Okay, remind us, what is REDD plus?
REDD plus stands for Reducing Emissions from Deforestation and Forest Degradation. It's a UN-backed framework. It's essential, but those credits often price lower, maybe in the $8 to $10 range. And that's because the permanence of the carbon storage in a forest is seen as less secure. There are risks of wildfire, disease, illegal logging. The blue carbon price premium reflects the co-benefits, the coastal protection, the biodiversity, but critically it reflects that exceptional centuries-long durability of the carbon stored in that oxygen-free soil. Investors will pay more for a credit they believe is going to last.
And looking ahead, the price projections are really optimistic, which should, in theory, encourage a lot more investment.
They are. Analysts predict VCM carbon prices could surge to between $40 and $65 by 2040. And blue carbon projects are expected to consistently be at the high end of that range. We're already seeing this reflected in how companies think. Swiss Re, the big reinsurance company, used an internal price of $100 per ton of CO2 back in 2021, and they expect that to rise to $200 by 2030.
So they're pricing the risk of carbon internally, which creates demand.
Exactly. It signals the massive potential financing that could be available for conservation, all driven by corporate risk assessment.
But the blue carbon market today is still incredibly small compared to its potential. What are the big challenges holding it back?
The first one is just the scale gap. To give you some context, in 2022, Verra, which is one of the main certification bodies, only issued about 0.97 million blue carbon credits. When you compare that to the estimated potential of this whole category, we're currently operating at maybe 1% of its full capacity. We're a factor of 100 below where we could be.
And a big reason for that gap is the size of the projects themselves, right? A lot of these habitats are fragmented, they're managed by small communities.
That's right. There's a real bias in the market towards smaller projects, often 1,000 hectares or less. And these small projects, they really struggle to absorb the high upfront costs of the science, the certification, the verification that the VCM requires. They also just don't attract the big institutional buyers, the airlines, the tech giants, who need to buy millions of credits at a time.
So how do you solve that? How do you get over that barrier?
The solution is bundling. It means you group multiple smaller, separate projects, maybe several salt marsh sites managed by different communities, under a single management umbrella. You treat it as one single carbon project. This gives you economies of scale, it cuts down on administrative costs, and most importantly, it creates a large enough volume of credits to attract that major investment.
And then there's the whole jurisdictional mess. Who even owns the carbon?
This is a huge structural barrier, especially for salt marshes and seagrasses. They're often just missing from government finance frameworks like REDD plus Coto-SA. For example, is a mangrove legally defined as a forest, which would put it under forestry law? Or is it a marine ecosystem under coastal protection law? The answer changes everything about who controls the carbon rights and who gets the money.
The science is moving faster than the law.
Way faster. And that ambiguity makes it really hard to monetize the conservation of these habitats.
But despite all those hurdles, large-scale success is possible. We saw that with the Delta Blue Carbon Project in Pakistan. What was their secret to getting to that massive scale?
Yeah, the Delta Blue Carbon Project is one of the world's largest. It covers a massive 350,000 hectares of mangroves. And it achieved that scale not just by planting trees, but by focusing on two key things. First, It worked to transform local practices, helping communities shift from destructive cattle farming to more sustainable livelihoods. But second, and this was absolutely critical, it had proactive, supportive backing from the state government. The government granted the project the necessary carbon rights and created a legal environment that made private investment possible at that scale. It's a perfect example of how public-private partnerships are essential to make this work. And, if we connect all this to the bigger picture, attaching these immense financial values to nature means we have to be incredibly rigorous about the quality of the projects. And quality has to mean more than just measuring carbon. It has to be high quality ecologically, scientifically, and socially.
Right. So investors and regulators, they need to look for a holistic approach. They need to make sure the money is actually creating positive, lasting change. So what does a high-quality blue carbon project look like?
The sources are really clear on this. A high-quality project has to optimize outcomes for people, nature, and the climate all at the same time. This means meeting three core objectives. One, it has to sequester and store carbon with high fidelity. It has to be measurable, and it has to be durable. Two, it must restore the ecological integrity and resilience of the whole ecosystem. And three, and this is maybe the most important, it must empower local communities to equitably participate in and truly benefit from the carbon market.
Let's focus on that third one for a minute, empowering local communities. Because history is just littered with conservation projects that failed because they didn't have local buy-in.
That is the crucial governance hurdle. Projects must rigorously ensure what's called free, prior, and informed consent. The acronym is FPIC. This means that indigenous peoples and local communities are not just consulted, they have the right to approve or reject activities that affect their lands and livelihoods. It also means ensuring inclusive participation and leadership for these groups, for women, for marginalized people. All the evidence shows that when the community has ownership, the long-term integrity of the project and the carbon is dramatically enhanced. They become the true stewards of the asset.
And that means building their capacity, right? It's not just about paying them rent for their land. They need to be able to manage a complex financial asset themselves.
Exactly. You need to build capacity in things like financial literacy, understanding revenue sharing, sustainable resource management, and even the scientific monitoring that's required. But there are still those big governance hurdles, that legal ambiguity we mentioned, who owns the carbon. National governments are increasingly trying to claim ownership of all carbon rights, which can completely undermine the revenue stream for the communities on the ground doing the actual work.
Now let's circle back to the science, because the financial investment is ultimately betting on a successful outcome. And we know that ecological restoration, especially in the ocean, is notoriously difficult.
It is the ultimate test of the project's integrity. All the money in the world doesn't matter if you can't get the ecosystem back to health. And historically, seagrass restoration has a very mixed track record. There have been some spectacular failures that have made regulators and investors pretty cautious. Success depends entirely on doing a detailed root cause analysis. You have to identify and eliminate the original threat, whether that was pollution or messed up hydrology, before you even think about planting anything.
If you plant seagrass back into a polluted bay, you're just funding failure.
You're just throwing money and seedlings away.
That makes perfect sense. The environment has to be viable first. But what about the techniques themselves? Even if you fix the environment, the success rates can still vary a lot.
They absolutely do. We see the same problems with mangrove restoration. Historically, the survival rates for some big top-down mangrove planting projects have been as low as 10 or 20%. But the sources show that when you follow scientific best practices, planting the right native species in the right place with the right hydrology success rates can jump up to 85 or 90% after a few years.
And that difference between 10% and 90% success, that's the difference between a high-quality carbon credit and a completely worthless piece of paper. Can you give us a specific example of how the science is testing these techniques?
Sure. There was one detailed research trial that looked at 3 different techniques for seagrass restoration, and it really shows the complexity. They tried transplanting seagrass using sods, where you basically dig up a whole plot and move it, but they found that led to an 83% decrease in the density of the shoots after just 1 year. The process itself was just too traumatic for the plants. They also tested these biodegradable mesh plates called BEC plates that are supposed to stabilize the sediment, but those were mostly destroyed by storms and got covered in algae, which smothered the young seagrass shoots.
So the high-tech engineered solutions didn't work in the real world. What did?
Ironically, a much simpler seed-based technique. They used basic Hessian seed bags. and that showed successful germination and development of mature plants. And this highlights two really crucial points. First, you need continued localized research to find what works in a specific place. And second, sometimes the most high-tech carbon finance has to be grounded in the most basic, simple ecological science to actually work. Robust science is just non-negotiable for a high-quality investment.
So we have journeyed today from the microscopic efficiency of coastal plants to the massive complex world of global finance. We saw that these blue carbon ecosystems, mangroves, salt marshes, seagrasses, they're not just fast and durable climate stabilizers. They provide multi-trillion-dollar valuations to our economies, and they often serve as the foundational wealth for entire nations, like the Bahamas. We detailed the dire threats they face, risking the release of CO2 on par with the emissions of the entire United Kingdom. And finally, we explored the emerging complex but rapidly growing financial pools, the voluntary carbon market, that are designed to fuel this trillion-dollar option to save the world.
Our sources consistently confirm a core value proposition here. Investing in these coastal ecosystems is a triple benefit deal that goes far beyond just reducing emissions. By funding their conservation and restoration, we are simultaneously building resilience and coastal protection for communities, we are drastically reducing biodiversity loss, and we are sequestering carbon for centuries. It's an adaptation measure and a mitigation measure, all packaged into one natural solution. And that makes it quite possibly the smartest climate investment available today.
And that leads us to our final provocative thought. Something for you to mull over as you process all of this. While putting a price on carbon provides this desperately needed finance and it helps correct the market failure that led to the destruction in the first place, one source we read made a really interesting point. It noted that the core benefits of coastal ecosystem restoration, things like food security, coastal protection, and erosion control, those should in fact be the true drivers of our conservation efforts. So the question for you is this: what does it mean for us, for humanity, that we may only truly begin to protect these vital life support systems once we assign them a specific tradable dollar value, rather than simply recognizing their inherent function in sustaining life on this planet?